Welcome to Insights. I'm Eric, and as the intro music implies, biotechs have been an eruption to the upside. Most other assets in the matrix have also been exploding to the upside, but biotechs has enjoyed a relatively fast move. So the question is, can they continue? Is there a pullback due, or is this it? So the biotech review today is going to study them in terms of the evolution of the trade. And we're going to have to open up the matrix to do that. So if you get a chance, you can download yours and open it up, or you can follow with mine. The biotechs are located on line 45 or row 45. You can see that the primary trend has been up for 9 months and has produced a 61% return. It's pretty high, and the question is it too much? So let's establish the phase within the matrix. We see that the column B is empty, so we know that this is an A&E phase, which is alignment and energy. That's phase 3. So we're really not in the primary trend decline, but it's potential that the daily, weekly, or monthly could be too far extended. So let's take a look at that. We see by the daily statistics here, the price and time cycles are both highlighted red, which are warning signs that they are getting close to extended. I think the more troublesome statistics are the weekly. The weekly price and time cycles are extended, or at least the price cycle is at 2.2. Time is not. It's roughly 0, which means it's close to the mean. And the monthly primary trend is also close to the mean or close to 0. Price is near 0, which means the move is not that big. And time is still negative, which means the rally is still young in terms of the primary trend. So the real concern here is the weekly 2.2 weekly price cycle. We can take a look at why that's a concern as we make a closer examination of the technical setup for the biotechs. I created a temporary tab, and inside the temporary tab we see the pro and public charts for the biotech. The one thing that we kind of notice is that the pros they've been buying since 2020, or since we made the low here, they've been buying, but they haven't broken out to new highs, so they're not exactly chasing. Who's chasing this rally? Well, the public's chasing. The public index has broken out to new highs, so it's a public-driven rally. That's kind of difference between the strong and the weak hands, and the weak hands are driving the trend. It creates a negative divergence, and we've seen in the past when negative divergences develop, price makes a higher high, but the pro index does not. Price has a tendency to fall back to the point at which the negative divergence was generated. So if the pro index doesn't resolve this negative divergence, it might fall back into this zone here at some point in time if the pros don't take control over from the public. So we'll have to, that's something that we must watch closely. The reversals, which you can see in the reversals tab as well, here it is for the biotechs. You can see the current price, and we can see the 3 different time frames. Price, there's only prices below, which means there's only reversals below, and that's confirmed by the chart here. We can see that price has basically jumped the supply-demand zones, has jumped the creek, and it's broken out. So it is quite possible from this formation here that we will run up into this area without too much of a pullback. But again, the concern is going to be most likely going to be extension within the cycles. The weekly cycle is extended at 2.2. It can go higher. I've seen them go as high as 3 and 4, but they don't go too high. The dailies get pushed a lot more than the weeklies. Weeklies usually struggle when they get near 3, and it almost forces like an intermediate correction. So one of the possibilities is somewhere around here the price will curl over and relieve some of the price cycle extreme reading on the weekly so that the trend can refresh itself. And I pulled this from the weekly impulse statistics, and we can see that the current impulse on a weekly basis is around 60-some%, and the maximum that we've seen for biotechs is about 82 or 86. And that's why the price cycle is 2.2 in terms of the price cycle extreme. We're getting close to the maximum reading, and that's usually, again, it's a bad sign. It's not something that you want. I wouldn't be chasing the biotechs here if you have the core position. This continues to push even further, and we'll watch the daily. Say this pushes into 2 or 3. With this weekly, it would be time to take some profits, wait for a pullback, and then to jump back in. So the play for biotechs is really nothing. You can't chase. You're really thinking about profit taking. It's not a profit taking because the primary trend is old or extended. It's really the daily and the weekly trends, the secondary and tertiary trends that are extended, and that's what we're concerned about. So that's the setup for biotechs. It's been an eruption to the upside, but I wouldn't jump all over it. We're seeing a lot of fear of missing out type of buying action in many markets, and one of them includes Bitcoin. That's a sign of inexperience. You never chase. You use your discipline. You follow the cycles. You follow price. You follow time. I'm pretty certain they're not going to follow price and time cycles in Bitcoin. That one's going to push extremes that we don't see them in many markets. They might be common in Bitcoin because it's extremely volatile, but it is dangerous. It's a sign of unprofessional trading. And there's a lot of it in Bitcoin. Bitcoin is kind of one of those I'm going to stay at home and trade assets, and they like to focus on it. So be careful, but be careful with biotechs as well. But you can see the extremes in several markets developing. So thanks for watching today's video. If you want to subscribe to the channel, go ahead and leave some comments. If not, until next time, have a good day.